This is a podcast by the Straits Times.
So using a can of Coke as an analogy, the budget shop is 50 cents, restaurant is $2, 3-star hotel is $5, the same can of Coke. So when you drink so much, right, and you understand how things are priced in different settings, you're more willing to pay because you decide whether it's worth it or not. So for major healthcare bills, I have to state for the record, I feel a little bit sad that people still assume that all doctors are overcharging. In the past 4 to 5 years, there have been a lot of government initiatives in conjunction with support from the medical community and insurers to ensure that there's fair charging with MOH fee benchmarks. There's also a thing called claims rules being in place. And of course, MOH has really come out to censure some doctors who they felt were grossly overcharging. So I hope the general public have a bit more peace of mind that doctors are charging a fair price.
I like the Coke analogy, but the difference comes in that Coke is something that you can consume on a daily basis. And you can actually shop around, like you can go to Sheng Siong and you can go to NTUC and compare prices. But for a surgery or let's say a beam therapy, you can't go to different hospitals and say, give me the price unless you have actually seen the doctor. So first part is that for medical care, patients can't shop around. So when all these economists say that, oh, price signals work and, patients will have the control, I think it's also like patients have limited control there. So the doctors, the institutions have to step in. So as Dr. Tan mentioned, the price transparency helps there.
Hi, I'm Joyce Teo. Welcome to Health Check. Today we're going to talk about the new health insurance landscape. So you've been paying for an integrated Shield plan rider that requires minimal out-of-pocket payments so that you don't have to worry about your hospital bill. But April 1st came and the Ministry of Health has pulled the plug on full deductible coverage for new riders, meaning the policyholders of these new plans have to pay $1,500 to $3,500 upfront. And the co-payment cap is also higher. So today we'll look at the factors you should consider when deciding whether to keep your existing rider or switch to a more affordable alternative that requires you to co-pay a portion of the costs. So joining us today is Dr. Tanya Swam, a breast surgeon in private practice who has given talks on the various healthcare options here and the importance of planning for healthcare. She was a former president of the Singapore Medical Association and has served as a nominated member of parliament. We also have Dr. Akshar Saxena, an assistant professor of economics at Nanyang Technological University. He's a health economist who figures out how to provide the best possible healthcare to the most people using the least amount of money. Hi, Dr. Tan. Hi, Prof. Akshar. Welcome to the show.
Thank you for having us.
Yep, thanks for having us.
Okay, let's get started. So to help us understand the April 1st changes, could you tell us very briefly how they will help us all play our part in helping to bend the healthcare cost curve?
Very briefly, the main change that has happened is we have introduced co-payments, which essentially introduces the price signal at the point at which you access care. So once patients see how much they're going to pay, they change their behavior. Everybody else in the room also changes the behavior once the pricing comes into picture. So personal responsibility plays a part here.
So Dr. Akshar, you're the health economist. So tell us, are we mostly overinsured when it comes to healthcare? And if that is the case, right, does that mean that most of us who have the top tier plans actually don't need them?
So the way I see it, or the way insurance is measured, is that when it stops being about covering the financial risk and it starts getting into the point where you are too generous, people start changing their behavior and consuming more of healthcare or asking for more healthcare. So I think in that sense, most of the Singaporeans are not overinsured. There is a small subset of people who had these riders. They were definitely overinsured, I would say. That they had very generous plans which went beyond financial risk protection.
Okay, so this problem that we have actually happened because of a small group of people. And that's also because of how the plan was structured, right? With this as charge plans.
Yes. So that's a very classic insurance problem, that once you have a very generous plan, there's overconsumption in the market. That overconsumption drives the pricing, the premiums go up. Once the premiums go up, people think that, oh, my premiums have gone up, I should consume more, or people tend to consume more. And that cycle just continues. And we have seen that happen in these particular plans.
Right. Okay. Which is why this April 1st changes, they're significant, right? They're going to help change things. So let's talk about the individual, because with all these changes, right, people will be thinking, I mean, if I were to downgrade my plan, what will I lose out on, right? So basically, the new riders come with a higher co-payment cap of $6,000 a year, and that is in addition to the deductibles of $1,500 to $3,500, depending on the ward class. Though these need not be out-of-pocket cash payments, right, because we can tap on our MediSave. But what else do I need to take note of?
Maybe let me take a step back and check whether our listeners understand the difference between a restructured public care versus a private care. It's actually two very separate systems. And there's this unusual supply of private service within a restructured public hospital. So essentially, let's think about it as three different tiers of coverage. So for certain people, they want what they perceive is the best. Choose their doctor, definitely A-class ward, single rooms, then that should be the private sector, which would be hospitals like the IHH groups, Mount Alvernia, Thomson, etc. Within the public hospitals, there are three clusters. And within the cluster, that's when you have all your different classes. So maybe what's special about Singapore is that patients really have a lot of choices. And what's important now is to understand your individual budget and which group of service can you afford. So now, even with the introduction of the riders, I think it's a necessary move forward for individuals to take charge and really look at their own expenditure to project which area of services can they afford.
If they already have their plans, and if they were to downgrade their plan from, say, a private hospital plan to a restructured government hospital plan, how will the coverage change for them, basically? Because besides the deductibles, the co-payment portion also goes up, right? It's from $3,000 to $6,000.
Not just that, if you drop the tier to private care within the restructured, you do not have access to the private healthcare. It's just a completely different product as far as I understand. So this is where I think we really should be reading our policy and understand what exactly we're paying for. So if I have downgraded my coverage to private within a restructured hospital, and suddenly I decided I want to see Dr. So-and-so in this private hospital, I have to be prepared to pay the full sum because my insurance has the right to not cover it.
Okay. So maybe we look at the public and private sector difference, because this episode we're talking about whether you should go for the new riders or downgrade your plan, right? But buying health insurance, I find it's very, very challenging because you buy it when you're healthy and you don't know how much you will need, what kind of problems you will have, right? So Dr. Tan, in your experience, right, what are some of the costs that may take a patient by surprise?
Yes, perhaps because I'm a doctor, I would have a very clear idea of what kind of a treatment I need, what services I need. And within the field, I will sort of have a certain preference who I think is the best in my view. So maybe what may help the readers is to know what is the elective versus the emergency. Elective means maybe something fairly minor, maybe a cataract surgery, a kind of a scope check, a breast biopsy. The predictable cost may be in the range of a few thousand. So for a working professional, it might be something that's affordable and you just shop around, find a good doctor, make an appointment, get it done within a few days. But if let's say it's going to be something major, cancer surgery with a potential chemotherapy, the bill size could be in the range of hundreds of thousands, then yes, I will be a little bit more prudent. Another thing is that you can mix and match the system. You could choose to pay for a private surgery in the private sector and still go under subsidized care at a cancer center for chemotherapy and vice versa. So I have patients who are very scared of moving to restructured. So let's say if I did the initial biopsy and I tell them, oh, blah, 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 it's a cancer, they will ask me if they go back to government sector, can they ever step out and see me ever again? Say, sure, can. Anytime, we welcome you anytime. And conversely, some patients would have had chemotherapy in the government sector for a while. But then when they meet the surgical team, because remember it's a team-based practice with a large team of trainees, junior doctors, senior doctors, some of them just didn't feel that comfortable. And through word of mouth, through online research, they land up in my clinic. And they get very fearful. If they step out to the private sector for surgery, what if the government sector doctors are angry? So I have met patients who are very scared. I thought it's really no problem. As the patient, you have the right to choose your doctors and we'll do the transfer of care, and that's perfectly fine.
Right, but the cost is a consideration, right? So many of us who have not been hospitalized, they don't know the cost involved, like say in a long hospital stay, right? Some might even think that private sector doctors overcharge patients due to the sheer size of the bill.
Yeah. When people eat, right, we eat every day, so we know exactly how things cost, right? So using a can of Coke as an analogy, the budget shop is 50 cents, NTUC is maybe 80 cents, restaurant is $2, right? 3-star hotel is $5, 5-star hotel is $10, the same can of Coke. So when you drink so much, right, and you understand how things are priced in different settings, you're more willing to pay because you decide whether it's worth it or not. So for major healthcare bills, touch wood lah, people are not so unlucky to need to go for major surgery so often that they get a price comparison. So I have to state for the record, I feel a little bit sad that people still assume that all doctors are overcharging. In the past 4 to 5 years, there have been a lot of government initiatives in conjunction with support from the medical community and insurers to ensure that there's a fair charging with the MOH fee benchmarks. There's also things called claims rules being in place. And of course, MOH has really come out to censure some doctors who they felt were grossly overcharging. So I hope the general public have a bit more peace of mind that doctors are charging a fair price. They can refer to MOH fee benchmarks, they can check with their panels to ensure that this is fair pricing.
So Dr. Tan, can you give us a rough idea of the expected treatment cost for a common cancer diagnosis case that you see?
As a breast surgeon, I will just use breast cancer as an analogy. So for something called mastectomy, breast removal, the total bill size for surgery would be estimated to be about $25,000 to $30,000. And the breakdown is into surgeon fee, anesthetist fee, and also facility fee. So broadly, surgeon fee maybe is about $8,000 to $9,000. Anesthesia fee is $2,000 to $2,500. Facility fee could be $15,000. So that rounds up, let's say, $25,000. So of these, I think we need to be aware. The deductible, let's quote it as the max, $3,500. And let's assume co-payment 10% of the remaining sum is about $2,000 over. So the patient has to be responsible to pay $5,500 in cash.
If I may interject, let me be the patient's advocate, and from the economist perspective, let me try to see where we could meet. I like the Coke analogy, but the difference comes in that Coke is something that you can consume on a daily basis, and you can actually shop around, like you can go to Shinseong and you can go to NTUC and compare prices. But for a surgery, or let's say a beam therapy, you can't go to different hospitals and say, give me the price, unless you have actually seen the doctor. And even if the doctor tells you the price is $5,000, as a patient, I do not know what am I getting. Like, I have not had 5 surgeries to know that, it's really nice to me and I should expect the value out of that dollar amount I'm spending. So when all these economists say that, price signals work and, patients will have the control, I think it's also like patients have limited control there. So the doctors, the institutions have to step in. So as Dr. Tan mentioned, the price transparency helps there. The second problem that comes with these price transparency mechanisms is that there's cognitive bandwidth. Like, if I look at the MOH website today, there are 25 different ultrasounds listed on it. And I have no idea when I go into the doctor, which ultrasound is he or she going to prescribe to me. And I cannot open my phone and ask the person, is this the one that you're prescribing me and how much are you charging me? Mm-hmm. Additional problem is that the doctors sometimes in the hospitals do not know how much that ultrasound is going to cost in the same hospital. So the doctor may also be like, I'm going to refer you to the diagnostic department. You go there and then you figure this out. So I think these mechanisms exist. They are there, but I think on the patient side of it, we do not have the instant knowledge that we can measure and compare the benefits and take a decision right away.
That's the case for the patient. How are you actually going to decide? We're supposed to be more responsible, right? We come out with more out-of-pocket payments. Okay, let's say there are 3 scans that you can go for. Which one? The doctors will tell you this one has this is how much. In the end, how do you choose?
I agree with Dr. Tan that if the doctor communicates with me that, there are 3 scans and this is the price, and the doctor tells me this is the potential value of that scan, that increases the trust level. If the doctor is opaque and just sends me for a scan which is sky high, sure, I may like the doctor, but I may start distrusting the doctor. So as long as the doctor conveys what's the value and the benefits of these scans or what's the pros and cons, the trust level goes up. So in our studies, we have seen once you build that trust level, the doctors also reduce the price that they charge the patients once they have a doctor-patient trust happening. And the patients tend to not shop around. They kind of go with the doctor and they trust the doctor even more.
So the challenge perhaps for my generation of doctors in our own private sector, private practice, is that we do have to be a bit more savvy and do appropriate financial counseling. So maybe I'm in my 40s. So for my peers, I've been telling them as well, don't feel personally attacked if the patient or insurers questioning about the pricing. It is a fair question. And if we quote a fair pricing, we can justify it. Emergency patients have no time to shop around. They just have to bite the bullet and go for it. For breast cancer treatment, some ladies have been quite savvy in going around to maybe 2 or even 3 different doctors. So don't forget that in the private sector, a lot of times it's a very emotional decision. I like you, I feel safe here, I'm willing to pay for it. So previously, when there was an S-charge plan, the patient will have no personal responsibility. The surgeon might quote the sky and, okay, no problem, I like you, anyway, insurance paying for it. Now with this co-payment in place, perhaps it's a good signal for everybody to step up and take personal responsibility. The surgeon has to do appropriate pricing. Maybe I'm a very good surgeon, but I cannot be charging the sky. I have the fee benchmark to refer to. I can go to the higher end fee benchmark. And when I justify to a patient, she has a few days, 1-2 weeks to think about it. The second check on the system is there's a pre-authorization for most of the insurers. So they will look through the bill size and they will question the clinic. Why are you charging like this? And we justify accordingly. When everything is settled, then we proceed with the not so urgent elective surgery. So there's peace of mind for every party.
So it's to be transparent.
Yes.
Yep.
And actually, it's a lot harder to be a doctor now with not just Google, but ChatGPT.
Right.
So some of the younger patients, generally younger ones, like people in 30s and 40s, they will already have done extensive research on, what the lump is likely to be. They're prepared for biopsies and PET scans, so on and so forth, MRI. They're very good at asking these questions. So in fact, I think the modern day doctor has to show not just knowledge, but empathy and to put things in context for the patient. So a lot of my practice is centered around not giving answers anymore, but helping the patient to come to an answer, if that makes sense to you. And patients are willing to pay for that level of trust and service. So it's no longer the old school system of patriarchal medicine, where the doctor knows everything, you know nothing, I tell you do this, don't ask questions. Now it's very collaborative, and I have patients who might reject my recommendations and choose a different path. And yet, if I am tolerant and supportive of the patient, they might still come back to me for regular follow-up and check-in. It's a very interesting dynamic that I observe in the doctor-patient relationship.
Interesting how things have changed. But what if we find ourselves in an unexpected emergency situation?
The problem comes when there's unexpected emergency and patients have complications needing ICU stay, another team of doctors in to help fix the problem. That's when the bill size can escalate out of control. So in such a situation, a few scenarios, if you have care in the true private sector, transfer of care to a restructured hospital is sometimes a bit difficult because logistically involves a discharge of care from this first doctor, and the patient has to own self somehow find their way to the second doctor in the restructured hospital. Frequently, it's through the A&E or sometimes through goodwill. The first doctor will have a contact in the government sector who's willing to accept this patient as a subsidized patient. So patients who have been through that system, you do need very good teamwork within the medical community, nursing community to ensure this transfer of care is appropriate.
If I may summarize, how economists would see this exact same thing from a slightly, as you said, top-down perspective. We categorize this in the research as more like 2 issues that Dr. Tan is talking about. Exactly, if I would say. One is the continuity of care. So she correctly mentioned that you want the patient trust to happen and that leads to better outcomes. But once the patients have to choose a different policy, what might happen is they might lose the continuity of care if they are forced to switch to a different doctor or switch to a different healthcare setup, go from private to the restructure, they're losing that continuity of care. And I think Dr. Tan's main message is that continuity of care, the trust has some clinical value. So we're going to lose that. So when you were asking me earlier what we are going to lose, I think that's one clear thing that we're going to lose, the continuity of care. The second thing that we're going to lose, which we study in economics a lot, is the liquidity part of it. So sure, we have a $6,000 copay. And when you put it out in the newspaper, it sounds very reasonable, $6,000 over a year. But the problem comes when you're looking at different households in the setup in the country. $6,000, if it comes at the wrong time, it comes just before the payday, you have rent to pay, you have had paid your kids' school fees and everything. You may not have the liquidity to pay for it. How would you do it? So I think the Medisave kind of helps with that, but that's where the MOH has to be very cautious as to this $6,000 has to be balanced out in some way. So I would say continuity and liquidity are the 2 things that we may lose out with this new plans.
Okay, so it's not as simple as just keeping aside that amount of money.
No, it's not.
Sorry.
No,
Isn't this personal economics 101? You're supposed to have not nest egg, a safety net of 6 months your expenses in cash lying around somewhere.
But how many people have that? I don't know.
I don't have.
No, but I think
Not my
that's where
friends.
I think I agree with that personal responsibility part of it. And I think that's where we teach our kids that, you should have personal responsibility. But the research, like the econ research, has shown that people are myopic. They tend to live in today, that if I can spend and get money today, that'll be best. So they don't tend to save. And I think that's where insurance has to come in. The government has to come in, not just Singapore, but around the world, say you have to save money for your unexpected needs. So I think we are looking at both the predictability of these large expenses, like I do not know how much cancer would cost. And then I do not know the probability that I will get hit by this cancer. So the probability of getting hit by a disease multiplied by the cost of that disease is very difficult for any individual to visualize, and for so many different diseases. So to prepare for that cost, I think insurance has to come in. So we can't get away from insurance, and we can't save money for that amount of unpredictability.
Right, we need the insurance
We need the
as
insurance.
well. But you were saying that 6,000 could be a big sum of money for some people.
So that copay could be a big sum for some people. So the government has to then come in and find different measures that, okay, if it's a very low-income household, how do we see that the 6,000 does not become catastrophic for them? So that's something the government has to monitor going forward.
Right, so the younger people who have not bought riders will have to think about this.
Yes. But the younger people also have the benefit that they are healthier at the moment. So this cost is going to happen in the future. So the idea is that if they know that 6,000 may happen, they may start changing the behavior slowly. So it's a very slow behavior change that may happen over time.
Yeah. So using the breast cancer example, right? 25,000 total bill in the private sector, and you need to co-pay $5,000 to $6,000. If I'm a single working young adult with no other children responsibilities, if I get diagnosed with breast cancer and I have, a healthy income, healthy savings, I might decide to just go ahead because I can afford the co-payment. However, if I am having 2 or 3 young children, the $6,000 could represent 3 months of savings. I'll be a little bit more cautious. I'll be shucks where to give out the family holiday, give out other things to budget for my care in the private sector. Then there'll be yet another family where, let's say, the supporting elderly as well, right? Or a child with a disability. Then that $6,000 could be 6 months or even a whole years of excess saving. For such a family, then they should not be thinking of treatment in the private sector, but go under subsidized care. And credit to our Singapore government, there's actually a lot of different schemes available to help families in need. You can admit as a B2 class, C class. There's all the different CHAS cards and level. There's even the yellow card, Medifund, for families truly in need. So the reassuring thing is that as long as Singaporean PR, no one is denied medical care in Singapore.
I mean, for this group of people, you actually don't have to think about the IP plan and rider. There's also this group of people who have decided to hold on to their existing IP plans and rider. So I just wanted to ask Prof. Akshar, right? Will the April 1st changes mean that the premiums for these older plans, the ones that cover nearly all the expenses at the hospital, will increase even faster than before?
Well, theoretically, if we go by the previous research, yes. But that's theoretically. So let me explain what goes on. So once you have these riders and new people are not allowed to buy into those plans, what we are left with is a old pool of people who are going to age and get sicker, and their healthcare costs are going to increase. And if the insurance company charges that cost to this pool of people, the premiums are going to increase faster and faster because no new people who can risk share are joining in. So theoretically, we should look at that. I'm not sure how the insurance companies work at the back end, so I won't be able to comment whether it'll exactly increase or not, but I do expect that to go up.
Because the pool is different, right? You don't have
pool
this
is shrinking now.
big pool of healthy people to help pay for it. Right, so that's something to think about for those people holding on to their existing IP plan and riders.
So, okay, maybe I can share my personal view on insurance. This is something I learned from one of my older girlfriends. Yeah, she works in finance, and this is the best advice she gave me. When you buy an insurance product, you should understand what you're protecting for. So for myself, I'm in my mid-40s. I have 3 young children. So she calculated for me before, from the time they are born to the time they're independent, let's say 21 to 25 years, I should be able to afford the best care for myself and for them. And currently, I'm actively working. I'm still reasonably healthy. So let's keep things going. But let's say fast forward 20 years later, when I'm 65, the children are grown up. Hopefully, they're successful. Maybe they will take over the payment for my premiums, right? But if they are not doing as well and they cannot afford to pay for my premiums, I am prepared to actually let go of the private shield plans and downgrade all the way to subsidized care in a restructured hospital, especially if I am retired and inflation has risen. So at that point in time, I must also accept that whatever I paid in the past is not wasted. Insurance premium is not a savings plan where I expect it to be returned to me somehow. I am paying for peace of mind. I'm paying for an emergency in these 25 years of coverage. So that is a concept that took me quite a while to understand. Otherwise, there's this Singapore kiasuism. If I never make a claim, my past years are wasted. So I hope that our listeners will also think through this carefully. It's not a savings plan. It's not an investment plan. It is just buying for peace of mind for that year of coverage, and we extend until the necessary time. So when I reach a certain old age, do I really need the best, optimal, best care by the Singapore's best surgeon? Maybe not. I just need adequate care to keep me comfortable, make sure I'm not suffering. And then as we age, I think to accept dying well is also something that's very mature. And we've talked about this before in another podcast.
Or in the previous podcast.
So I wanted to add, I totally agree with your way of thinking. So if everyone can think that way, I think we won't have such problems of rising healthcare costs and burgeoning premiums. The problem comes in that very few people think in this particular manner and optimize their plans every year or depending upon age. So based on the data that I have analyzed, once people buy their plan, and then most of the people actually buy plans from word of mouth, like my friend bought the plan and hence I will buy this plan, or my wife's friend bought this plan and I'm buying this plan. So once it's word of mouth and you have not taken a rational decision, again, cognitive bandwidth, you don't switch plans every year. You just bought in, you let it run, and it just keeps running. So I think that's where the problem comes in. But I totally agree with Dr. Tan. If we can take a conscious decision to reevaluate our choices, then we could save the cost.
Right. So it's about thinking about the future now. Okay, let's say you are 35 years old, you have corporate insurance. How are you going to think about that, Izzy? What you will need at the age of 65? I think that might be difficult for some people.
Yes, yeah. So there's actually a lot more to just buying the insurance plan. I think maybe one difficult thing I learned is that every insurance product is a standalone product, which is very confusing even for myself. Yeah. And different companies have slightly different terms and conditions in terms of coverage, exclusion, etc., which I think the average person may not be aware until they have to make a claim. So yeah, it's still our personal responsibility to know what the coverage is. There are people who are really very savvy and they max out all their necessary insurance, including critical illness, absence from work. There's some product that exclusively is a income compensation. So then when I have to fill in all these forms for that one individual, I'm like, wow, you've really thought ahead and bought all these things. But in general, I would say flexibility and options are the best. If you are working and there's a good corporate insurance, that's great, but don't just rely on it. If your finances allow, get your own personal extra shield plan for the option of getting private sector care, because corporate insurance will end once you stop working or if you change company.
Or the coverage might not be enough, actually.
Yes, that's right. The other thing about corporate insurance is that depending on the tiers, the actual product, some of them have very lower reimbursement for professional fees. And I will tell you as a fact that some doctors will not sign up with this corporate insurance. Yeah, so something to keep in mind, there will be less options, even though you have this corporate insurance coverage.
Okay. Well, that's a lot of stuff for people to think about, I guess. The key thing is basically go for the plans that you can afford and then keep an emergency sum that covers the deductible and the co-payment in case of emergencies. And that would be for the very large and often unexpected healthcare bills. As the Ministry of Health has projected that 6 out of every 10 people who make a claim on their riders should not have any out-of-pocket cash expenses after using their MediSave. So for the remaining 4 in 10, most would only have to pay $1,000 or less out of pocket, and practically all would pay $3,000 or less. So what is one final thought that you want to leave our listeners with?
I think personal responsibility, you heard me say that many times, taking charge of your own health, of your own finances, understanding budget. These are real life adult things that we need to learn, especially when you have multiple dependents. Don't wait until the emergency to panic and realize that there's a lot of things you're not aware of.
I agree with Dr. Tan. I think personal responsibility is one of the major things, and finding out how much you would require and doing a proper calculation at least once every year, like your financial planning and taking a look at your resources every year, I think that's very essential for people, and evaluating their choices. So it's not just that you get the most extensive insurance or you buy the cheapest insurance. Take a look at and talk to different people and see what is covered, what is not covered.
Food for thought, especially when a lot of people don't know what they have bought. Okay. Thank you for your time, Dr. Tan and Prof. Akshar.
Thank you, Joyce.
Well, that's a wrap for Health Check, a podcast series by the Straits Times. Don't forget to follow Health Check for free on your favorite audio apps, Apple Podcasts and Spotify. Like us and give us a rating. This episode is edited by Amirul Karim. Thanks for listening.
Send your feedback to podcast@sph.com.sg. Find us on Apple Podcasts, Spotify, or within our Straits Times app. Thanks for listening.